If you're on the path to financial independence, saving smarter, and building that dream future, then you absolutely need to hear this. We're talking about 2026, not just another year, but a year packed with significant financial changes that could impact your taxes, your savings, and ultimately your timeline to financial independence. You work hard for your money, you strategize, you optimize. So imagine missing out on a tax break, or worse, making a contribution mistake that costs you down the line simply because you weren't aware of the new rules. For us, financial independence seekers, every dollar saved, every tax optimization, and every smart investment decision accelerates our journey. That's why today we're breaking down the key legislative and IRS changes coming in 2026 so you can stay ahead of the curve. Let's dive into the tax landscape first. Some big shifts are coming that could mean more money staying in your pocket or at least help you plan more efficiently. First up, the IRS adjusting tax brackets and the standard deduction for inflation. This is generally good news. It means the income thresholds for each tax bracket will be wider, which can prevent bracket creep and potentially result in a slightly lower tax bill for the same income. Also, the standard deduction is going up, which might mean fewer of you will need to itemize to get a good tax break. But here's where it gets interesting. New deductions. For 2026 through 2028, some new deductions are available. If you or a loved one are 65 or older, there's a new deduction of up to $6,000 for single filers. If you earn tip income or significant overtime, there are new deductions for qualified tip income and the premium portion of overtime pay. Buying a new car, you might be able to deduct interest paid on loans for newly financed US-assembled personal use vehicles. Even if these don't apply to you directly, know they exist and always check the latest thresholds with a tax pro as things are constantly changing. Now, this is where many of you on the financial independence journey shine, maximizing those retirement accounts. The IRS just announced the 2026 contribution limits, and they are a reason to celebrate. More room to grow your wealth, tax advantaged. So let's break down the key numbers. This is your big one. If you have a 401k, 403b, or 457 plan, the limit jumps from $23,500 to a new high of $24,500. That's an extra $1,000 you can funnel into your workplace plan. Now, if you're 50 or older, your catch-up contribution is also increasing to $8,000. For those who are making IRA contributions, the limit rises from $7,000 to $7,500 in 2026. And for those 50 and up, the IRA catch-up is now $1,100. But wait, there's a critical game changer coming from the Secure 2.0 Act for workplace plans, the mandatory Roth catch-up. If you're age 50 or older and you've earned more than $145,000, that's your 2025 income adjusted for inflation, in the prior year, your catch-up contributions to your 401k must now be made on an after-tax Roth basis. This is not optional. This means you'll pay taxes on those catch-up dollars now, but they'll grow tax-free and come out tax-free in retirement. It's a forced move towards tax diversification, which can be a good thing for many, but it's a huge shift from previous years where you had the choice for pre-tax deductions. Increase your 401k deferrals to hit that new $24,500 limit if you're 50 plus and a high earner. Prepare for that mandatory Roth catch-up and adjust your tax planning accordingly. Tax diversification is key on the road to financial independence. Finally, let's talk about something that can quickly derail even the best financial independence plans: healthcare costs. Now, starting in January 1, 2026, the enhanced premium tax credits under the Affordable Care Act are set to expire. These credits have significantly lowered health insurance premiums for millions of Americans who purchase plans through the marketplace. As I record this, Congress has yet to act and extend these credits. Many individuals and families could see a significant jump in their monthly health insurance premiums. For financial independence seekers, especially those looking to bridge the gap before Medicare eligibility, this is a potentially massive increase in a core living expense. If you rely on marketplace insurance, start researching alternative plans or budgeting for potentially higher costs now. Healthcare planning is an often overlooked but crucial part of your financial independence strategy. So there you have it, a rundown of the key financial changes coming in 2026 that could significantly impact your journey to financial independence. From new tax deductions and the higher retirement limits to that critical mandatory Roth catch-up and potential healthcare cost hikes. To help you remember all of these items and be prepared, I created a great guide that covers these important issues. You can download it for free in the link below. Remember, staying informed isn't just about avoiding pitfalls, it's about seizing opportunities to accelerate your financial independence timeline. So here's a question for you. Which of these changes will impact your financial plan the most? Let me know in the comments below. And if you found this video helpful, take a look at this other video to help you towards financial independence. Remember, achieving financial freedom is not so hard if you plan properly. See you in the next one.